Welcome back to the Daily Hunt. I'm Henry, and as always, we're going to be covering a market analysis. We're going to be looking at the indices, the major indices, S&P 500, Nasdaq, Russell. We're also going to be looking at crypto. Crypto had a big sell-off the last few days after the Fed decision, and there are some reasons as to why that happened. Finally, we're also going to be covering commodities. I'll be sharing some of my ideas and what I'm doing with my portfolio as well throughout the video, especially with stocks and crypto. So what's happened is Fed decision comes out on Wednesday, and Jerome Powell didn't shut the door completely, but he warned everybody that a December rate cut might not actually be on the cards. It might not be something that they're thinking of doing, and they might slow things down. We've had a few percent drop. I think it was 1.5% or so that we've had interest rates being dropped in the last year or so since we had the tightening, and he feels like they should take some time and see how the government shutdown impacts the economy, how tariffs will be impacting the economy as well. Trump then that day, I think on the following day, which was yesterday on Thursday, he came out and said that there was an agreement between the US and China on some tariffs, and some tariffs have been removed. So some positive news, but some negative news. I think the reason why we're seeing a dip, and I already mentioned this in the previous videos, we were overextended on the technical perspective. So of course we need that move to the mean reversion at some point. And we also had everything priced into perfection for further rate cuts. So with Jerome Powell saying that potentially we're not going to have a rate cut in December, that slows down the euphoria. That slows down the market a little bit. And that's fine. The dip is normal. I've mentioned this before in my previous video. The dip to around the 6.8 zone, around that 10 MA zone, would have been normal on the one-day chart because of the overextension. That's exactly where we are right now, and we're looking for some support around that zone. With crypto, we entered early. I entered early personally. I'll speak for myself, and I had to get out of those trades and manage the situation. Crypto keeps on consolidating around a certain zone, and we'll be covering that as well in the video. And then we'll cover the rest of ideas and other things that I cover during the daily hunt. Let's get straight into it. I'm going to cover the analysis right now. We're going to be starting with S&P, Nasdaq, Russell, and then the VIX, and then we'll move on to the other markets. Okay, so the S&P 500, we've had this bounce. We're going to move up higher. I did mention here on the Tuesday that we are overextended, okay? And we had some gaps as well developing here that I felt would lead to some sort of pullback. And it was normal. It was a normal pullback, in my opinion. It's still a normal pullback. We're around the 10 EMA. Nothing to worry about. We're around this lower band of the channel. That's the channel that we've covered here for a number of weeks. And it needs to hold here. In reality, we need this to hold. If we go back to the 20, we are now in the setup that I mentioned in my previous videos, a distribution-like setup, okay? Something like this, and then boom, okay? I already mentioned that, and then maybe we rebuild. So we've covered that in the previous videos, and I've tried to warn you of this potential overextension here in the market, being a bit too euphoric too quickly on just some news on the tariffs, and then with the interest rates decision coming out, what Jerome Powell was going to say was going to be the key thing to watch out for. He cooled down further interest rates so that the price came back down. Now, it doesn't mean that we're selling off completely. It will have to build structure, and there'll be other events that we have to monitor in the next few days and weeks, as well as earnings that we're looking at. So overall, this is the kind of the situation that we're in. We are in a worrying territory here on the other side with relative strength slowing down. And what we need, like I said, is a bounce. We need that if we want to keep on this momentum. We do have issues with the broader market already anyway, because what's really happening is if we go to the equal weighted, I'll just go to RSP, but there's other ones that you can go to. If we go to the equal weighted S&P 500, we have a slight problem. And it'll be very, very obvious here when it appears. Here you are. So S&P 500 moving up higher, all-time highs. Equal weighted has found resistance around this 118. This is the equal weighted Invesco. I mean, you can go to any of them. It's finding resistance around this zone. Okay. So in reality, we haven't actually seen any real progression with the new all-time highs. And yes, we had 2 new all-time highs on the equal weighted S&P 500, but right now we've had a lower high. Okay, and that is worrying for the markets. Now, if we breach this level, we can then move down in the equal weighted, and I think that will drag the rest of the S&P 500, the regular S&P 500 down. The reason why we're seeing this is we have Nvidia, Palantir, these bigger companies growing, and we don't have the smaller ones doing anything. Here you are. Okay. So we keep seeing new all-time highs around that same period. So this was May. We had May, right? We had June, July, and then we had September, and then now we have October, right? And we're seeing Nvidia and the large caps moving higher and higher and higher because of the AI bubble that we're in. And that's normal. That's fine. However, it is a risky situation. And like I mentioned, if you're not seeing the broader market doing well, there is something not going well with the broader economy as well. Okay. Everything that we're seeing, the growth in the economy, is all down to data centers, AI, etc. And here you are. I'll show you again. We have May. Yes, we moved a little bit higher. We have July. We have the August, September play here. And then since then, we are slowing down. And then now we have the higher low. And yes, okay, we could go up here again and then come back down. But it's something that you should be monitoring and managing as much as you guys can, okay? The volatility has been very high this year, especially with Trump and tariffs and a number of other factors coming in and creating that volatility in the markets. The stock market hasn't felt it as much as the crypto market and risk on assets like the Russell 2000, so on. But yeah, the volatility is still there to be seen, still there to manipulate and impact traders' performance. The Nasdaq as well, showing here all-time highs. Yes, all-time high for the Nasdaq, but again, I already explained it. Nvidia, Palantir, all these major companies are seeing all-time highs, not in the broader market. I think we can also cover the equal weighted QQQ. I think it's one of those. It was the E before the QQQ or the QQQ before the E. I'm just gonna remember it. Okay, so the Nasdaq moving up higher, creating these new highs. The equal weighted Nasdaq again because of the top companies holding up and raising everything. But look, we are at levels where I think relative strength, it usually starts weakening. as you can see here. So we are overextended, and like I said, a pullback would be natural, and I will add an alert here to this area around the 48,200 on the equal weighted, because I think this can be a key trigger point for a sell-off in the market. Now, we're probably going to be able to see that a little bit earlier anyway, but just good to get an alert in there just to see where the situation is. And like I said, we have this overextension. It looks to me that we should be coming back to 47,000 on the equal weighted again, and that dip would be normal. Okay, it would be a very, very normal dip, and it wouldn't be a surprise to me here. So we had this on the structure, this one here as well around May and June, and now either we're gonna consolidate or come back down and then kind of rebuild again. Okay, so we have to monitor the situation. Let's go into the Russell 2000 small caps. Selling off here, risk on assets, these ones. Interest rates, if they're not being reduced, traders usually take that as a negative sign for small caps. And again, as you guys know, as I mentioned a bit earlier, overextension on the equal weighted NASDAQ, overextension on the S&P, and then we also have the lower high on the equal weighted S&P, showing that there's weakness in the smaller caps. And then we also have the double top here that we're developing. Okay, so that double top is a worry for the market. There you go. And we're breaching this midpoint. We could come back down here before we build up again, or we resist, come back down again. This would be kind of like the key pivot point, whether we move up higher or come back down. My opinion, seems like this area on the RSI is now on the verge of being retested again, and again that corresponds with a bounce or potential breach of that 43 level on the RSI. Okay, the VIX, we saw the VIX do exactly as I expected. We had that bounce after the drop, moved up higher, resisted. We're now seeing it consolidate here up and down for a few days, which is creating the sell-off, I think. So the VIX is kind of consolidating here before we potentially go up higher or move down lower. But for me, I don't see that move lower on the VIX. It would be very, very, it would be something that would add a lot of certainty to the market. And at the moment, there's a lot of uncertainty after what Jerome Powell said in the press conference, and with tariffs and other geopolitical factors. So potentially another sell-off. Okay, we have to monitor. It looks like a high probability play, especially on the equal weighted NASDAQ. That's something that I might even trade myself. Okay. All right. That's it with stocks. I want to cover some of my portfolio. CRNT has moved really well for me yesterday, even though we had a bit of a sell-off. This is the second trade after this low here. I really like the low, as you guys can see here. Broke up. We end up trading it. Then I end up trading once here, sold off, traded again around this zone, and then we're now seeing potential for an upside. It's around $3, hopefully. And if we can get this moving, maybe even as high as $3.5, and that would give me a nice 1 to 3, 1 to 4 risk reward ratio. We had a bit of a sell-off on Palantir and Nvidia. Again, guys, these are trades that I've shared in my Discord group, both as a watch list on the Novice TrendHunters, but also as an actual trade, and with complete transparency, telling you guys when I've entered and what stop losses, etc. I'm using, and that's on the Apprentice Trader group, which requires a bit of training so you understand the strategy and a higher fee to pay. But a novice trader or the novice hunter group, the link is below in the bio. You can join that first, give it a try, and then if you enjoy what I have to offer and my insights, and you want more, you can join the other groups. Okay, so Nvidia, nice move here, but again, I don't really like the overextension. Balance here, very similar here in the setup. We have WGS, which moved quite well the last few days and then dropped on Tuesday and Wednesday. And what I would like to see now is a bounce coming back up to around this level again. Okay, that's something that I'm looking at. I want that bounce. SMR, Tesla sold off a little bit, and I'm probably going to look to minimize losses there. I made a small loss, I think, on that one. Alibaba as well, I think a small loss, so again, minimizing with that one. New SMR doing pretty well, broke out here. We've kind of entered in a really, really nice spot. And even if we come back down, I might sell off around break even. So not really risking much here. And then, the ideal would be a couple of days of good movement, at least testing back this level. That gives us a bit of a buffer. And then we can, even if we get a dip, something like that, we can still kind of hold through in profit. We need this to kind of show a bit of momentum. Otherwise, it won't be it won't be worth holding. We might have to sell. Oklo, similar situation, but it hasn't broken out fully yet. We've entered a bit early. Still hasn't shown that momentum. I would like to see next week momentum here to break out. And if it fails, it fails. It's not a big deal. But I want that breakout very, very soon. Otherwise, I think we're going down and we're moving back down to this level. So that's something that I'm concerned about. We have, what else do we have here? I think some of them have been sold, but CRM, Salesforce, has been pretty good for us, doing quite well. And I'm looking to add some quantum plays. I was looking to add crypto plays, but that failed, so we never got a chance to add any of those. Salesforce, nice bounce. I like the bounce here. We ended up buying around this level, 240, and as you see here, I've drawn it, but we kind of like a nice bounce would be good. We get it on the 20 in May. We end up buying around this level, and yeah, I mean, if we can get the break here, I think we fly. If we go back and test some of these zones here, this one, okay, that's what I'm seeing personally. Anyway, we QBTS and RGTI, so Rigetti and QBTS consolidating here quite nicely. Bear in mind that we traded this perfect situation here, and we have made a 1 to 14 on this trade with QBTS because we sold around this level, and then we've had this beautiful dip here, and this is what I was looking for. We're kind of getting that, and that's fine. If it's above the MAs, that's fine, and we just need to make sure that we break with momentum, and that point will be the point that I'll be entering here. I thought maybe we consolidate a little bit lower, and then we go into that momentum move mid-November, but we're seeing a bit of strength the last 2 days while it's consolidated here, and I really like the bounce around this level. Just have to wait and be cautious. It can easily go either way, so not rushing this trade. It's a bit like SMR. It's a bit like Oklo in the sense that it's consolidating after the buy the dip, and then it could go either way. It's 50-50. Rigetti looks a little bit better in my opinion, and I might be looking for a trade here today. I like the bounce, high and low. The break here will then take us to, even if it takes us to a lower high, a lower high, we will be in a buffer zone where we are in we have a margin of safety essentially. And even if we dip, we kind of self break even or a small profit. That would be ideal. But we need the momentum. So we need today some follow through momentum or on Monday. Ideally for me, it would be Monday. End of the week isn't really that good. So bounce, key breakout zone for me. Even if we go to here, lower high, we are in a good area. Okay. So we're seeing, but again, this could easily go like that. And then that, what does that do? Lower low. Okay. So you could see it either way. It's a 50-50 zone, like I mentioned, and it's about positioning yourself at the right time and making sure that you don't get caught out in a fake breakout of any sort. And that's where the full strategy comes in, and I'm filtering, and I'm looking at multiple time frames and so many other factors. But this could be, it could easily be a end of a move here, and then we come back down a little bit lower to around this level where we build up. So it's a 50-50 still for me, leaning a little bit more towards the long side because we've already had these continuation plays. But it's not to say that we're not going to get something similar to January of this year. So sell off, come back up. We think we're going to break up. We break down, continuation, and then it builds structure again before it moves up higher. Okay? So that's why I'm telling you it's a 50-50 zone. That's the reason why. Okay, let's go into crypto now really quickly. I want to cover Bitcoin. I want to cover Ethereum. I won't bother covering altcoins. There's no reason here. We need to really know where the direction of the market is. This rejection was expected. So go and watch the previous videos. My rejection of 115 or 116 was expected. And I told you guys, right? I'm entering early on this move for a reason. We have the tariff news and interest rates. It could lead to something where the market goes euphoric. And for that reason, I decided to enter a little bit early. It is outside my full strategy. It didn't have full confirmation. It wasn't fully confirmed. I'm making this very, very clear. Go and watch the previous videos. Go and watch the previous analysis on YouTube, and you'll see that I mentioned that. Now, we entered around this 112, 113 zone. The rejection was around the 115, 116 that I mentioned, and then we came back down. Now, we are still holding here and trying to find support. So it went from, let me show you, it went from a wedge, a descended channel, fake breakout, come back down, liquidates, comes back up, and so on and so on. Does all these moves to help liquidate traders. It's basically building a base for either way. And my job as a swing trader is just to time this to perfection as much as I can, considering the volatility and the fake outs that we've had. Getting caught out on this one is not a big deal. It's one trade. And yes, we've had a dip. Now we have the support again. So again, we need to see a break above this zone. We have to retake that zone again. And the more often that we find support around this level, 100, 105, 106, the more times we find support around this level, while we do this, creating lower highs, and we're tightening here, the better for us that we'll decide. And again, I've mentioned that November is the key month. This was an early trade because of the news that was coming out, and crypto can move quite aggressively on positive news. So I wanted to be entered here. But it's not set up. It's setting up. It's getting ready. It's preparing for something. And the move, for me, is again still 50-50, and it's a bit of a worrying sign that we have these two big 50-50 moves with S&P 500 and NASDAQ potentially coming back down on a dip, because in reality, what I'll be looking for is if we break these levels here, we go to 100, we're then going all the way down to 90. And the reason why that is because of the monthly. I'll show you. Now, we're finding support on that 10. Okay, 10 EMA, 10 MA zone. We're finding support on that zone, okay? It's positive because it means we're finding support around the 1 year average price. It's negative because it means that if we don't find significant support in the next few weeks, so if November doesn't pull off a bullish move to build up some momentum, the trend is finished on the monthly. And by finished, I don't mean it's completely done forever, but what I mean is we go to the 20 MA zone, which is around 88, 90, and then that can break and we can go to around 70, 72, 75. These are zones that I'm watching out for, but I'll only watch out for them once we decide where the market is going. Okay? So again, still 50-50 going into November, but November was the month that I already identified as the key month for crypto. Another reason why that is Ethereum already coming out of a bottom, a base here, showing strength, going back to all-time highs, resisting there, dip, and it could easily build momentum. There's two areas that can build momentum on the monthly. It can build on the 10, the average 1 year price, or the 20. Now, if we go to the 20, it's better for bigger players. So that's why we have to monitor the situation very, very carefully, whether we go short or long. For me, I'm going to be looking at the 1 daily chart and looking at where that key moment is. Again, with Ethereum, we are continuing to find support here. This is the key. Continues to tighten. And then we decide. Hopefully it's on the long side because that's where we can make more money. But yeah, it's really, really key moment right now for the market. Probably on the upside, in my opinion. And November, again, proven to be the month I've mentioned, the decisive month. And it's about events and triggers and catalysts coming out to help support this thesis that we move up higher. If not, we have to sell off. And yeah, so even with this, I entered quite early around the 4K zone. And then I mentioned that we have resistance around 4.2 and then resistance around 4.4. We didn't even get to 4.4 and then we came back down, but we're finding support around this level here. Okay. It's not too bad. It looks pretty decent. And maybe again, we can kind of do something like that and then decide. So very, very decisive, this very important period for the crypto market, in my opinion. I'm just going to take out these drawings. Don't want too much noise here. Okay, that's it for crypto. There's nothing else I want to cover. I think Bitcoin dominance and all that stuff doesn't really matter until we get full structure. If you want an alt season, we all know Bitcoin up, alts up, and we want dominance down. But what we want is Bitcoin moving and dragging the rest of the market, but just not outperforming altcoins. That's what everybody's waiting for. We haven't had that yet. We've had it in spurts. We've had it in some moments, like these moments here in July, but nothing on a significant scale where we've had multiple months of this happening. So that means that we're not ready. And November again for me is the key month, and I'm gonna try and find the perfect moment to time that and trade the opportunity. If we break 3.6, we are done with Ethereum, and we are going back down to 3K. Similar to Bitcoin, going back down to around 90K. But it's still looking good. That's what I want to say. Still looking okay. Still structuring in the right way. Let's go into commodities really quickly. I want to go and look at the Dixie. Let's look at the Dixie. Okay. So I mentioned to you guys in the previous video that if we break 99, we have a high probability that we will start showing strength with the dollar. And we broke that. I'll show you the alerts. If you're not bothered to watch the previous videos, which I think you should watch to verify that I was accurate on this this point. The Dixie, where is it? It broke right here. Right here, 99. Okay, broke that level. We are now building towards the dollar strengthening. This is the reason why we saw a sell-off. We are still holding this trend line. For us to be confident that crypto will go down and other currencies, we need this trend line to break. It's very, very simple. We didn't get it here, and we are building our momentum for that 100, maybe 101 level. That will lead off to further sell-offs. So be very, very cautious about buying here when the dollar is strengthening, because it means that there's a bit of uncertainty, and the safe trade, the safe place to be is cash, right? With the dollar's increasing, as well as other factors as to why the dollar's increasing, but I don't want to go into that too much. But I'm just giving you guys a basic example of the dollar moves up higher. You could have sold off on that trigger point there where it was 99, and you would have protected yourself from losses in crypto. Very, very simple, and I shared that in the previous video. Commodities, other commodities I want to cover are gold. Gold around that 4K zone that I mentioned. Doing exactly what I expected here, 4.3 to 3.9. Then rise it up here to create the kind of the market structure that it needs. Yes, it could be accumulated here by institutions. That's okay, but as a trader, I'm not looking to accumulate in here. I'm looking to swing trade this. Don't know why this is moving like this. Okay. So as you can see, move up higher, comes back down. 4.3 was the key level, and then now, if we want more bullish momentum, we need this break here. 4.05, 4.1, 4.05, I think, is the key. Yeah, 4.6, 4.06. And that would be a key break for then a lower high, for it to continue consolidating and building structure and reaccumulated here at these lower levels around the 4K zone, 3.9K zone. That's normal. That's normal structure. We also had it go to around this 45 level, which is held many, many times over the last 2 years or so. So gold's in that situation. We have a strengthening 10-year bonds here as well. That's with the dollar increasing. We have oil dropping, US oil. The Japanese market's doing really well as well. So that's something that I missed out on. Personally, I feel like I missed out on the Asian markets, the Korean and the Japanese market. But we have US oil. And I drew what I was expecting to happen in the next few weeks. Hopefully that appears. There you go, something like that. And yeah, of course we can bounce here and move up higher, but we need this break. We need the trend line break for it to really show some momentum and break out of structure. We can come back down, kind of retest this zone of 55. 56, and then consolidate here and then break up. It just depends on how this structures, but personally I don't trade it, so it's not really something I'm watching. Natural gas was one of those that I thought everybody should be watching. It's just performing exceptionally well. Again, I didn't trade it. I didn't trade the futures, but I've tried to find opportunities in stocks, and I just didn't find anything that was suited to my style, so I didn't trade it. But it's been very, very good. I've been talking about this since September, where I said seasonality would kick in and then this will break up. Yes, it had the volatility, but you've had some significant gains here. If you were positioned since September, you would have made around 35% on natural gas, pure seasonality play, and structure, some breaking of the trend line, and the fact that it moves like this during the season. Other markets, the Hong Kong market is down, Hang Seng is down, Japanese market up, I think Korean market is also up. So these are two markets that I end up missing out on. But they're performing really, really well. Nothing else to add here. I think I'll leave it at that. If you guys enjoyed the video, please go and like, comment. If you have anything else that you want to be covered during the video, let me know. I'll try and cover it only if I think it's worthwhile, and says that if I'm looking at the trade, I'll probably cover it. If not, there's no point. If you guys want to see my watch list on a daily basis, what I'm looking at to buy, and this is a hand-picked list. It's not just a scanner. It's not me going in there and giving you guys 100 stocks. It's maybe one or two a day where I'm sharing them as a watch list. If I see an exceptionally good idea, I share it as a top idea in my community, and I provide the chart analysis as well. So you're going to get those top ideas coming in maybe once or twice a week as well. As a swing trader, I don't need to trade much. And finally, you're also going to get my market condition analysis and macro analysis in the community, as well as engagement with other members who share ideas and discuss potential opportunities in the market, both in stocks and crypto. The links for that community are down below in the description of this video. You also have links for my X and other social media accounts such as Instagram and TikTok. Go and watch the short form content as well if you're curious about seeing my analysis for some of the major pivot points, S&P 500, NASDAQ. I've shared all of these in little snippets. My team and I have shared them. So yeah, go and check them out. Take care. See you next time.